Something is quietly breaking in the silver market, and almost no one is paying attention. On the surface, everything looks completely normal. Prices move up, prices move down, analysts debate on TV, and investors scroll past without a second thought. But beneath that calm surface, a pressure has been building for years. And when markets build pressure like this, they don't release it slowly, they snap. And when they snap, they move fast, faster than most people are prepared for. And what I'm about to show you isn't just another commodity story. It could be one of the biggest financial shifts of this decade. Because this isn't just about price, it's about a growing imbalance that the majority of investors still don't fully understand. To understand where things are going, you first need to understand how we got here. Because silver isn't what it used to be. For decades, people saw it as just another precious metal, something you hold during inflation, something that sits in vaults or gets turned into jewelry. But that version of silver is outdated. Today, silver has transformed into something far more critical, something industrial, something essential to the modern world. It's inside solar panels powering the global energy transition. It's inside electric vehicles driving the future of transportation. It's used in medical technology, advanced electronics, and even the infrastructure behind artificial intelligence. And here's why that matters. Because this kind of demand doesn't disappear when prices fluctuate. Industries don't just pause production because silver gets expensive. They need it, and in many cases, they can't easily replace it. And this is where the real story begins. Because while demand has been quietly accelerating, supply hasn't kept up. Not even close. Unlike gold, silver isn't primarily mined on its own. Most of it comes as a byproduct of mining other metals like copper, zinc, and lead. Which means silver production doesn't simply increase because demand rises. It depends on the economics of completely different markets. So even if the world suddenly needs more silver, miners can't just flip a switch and produce more. That creates a structural bottleneck, a built-in limitation that keeps supply tight even when demand surges. And for a while, this imbalance didn't seem like a big deal because there were reserves, there were stockpiles, there was enough cushion in the system to absorb the pressure. But over the past several years, that cushion has been shrinking, quietly, consistently, year after year. The market has been running in a deficit, meaning more silver is being used than produced, and that gap has been slowly draining global inventories, not in a dramatic, headline-grabbing way, but in a slow, almost invisible way that most people never notice. And this is where most investors misunderstand the word shortage. They imagine empty shelves, panic buying, instant chaos, but that's not how real market stress begins. It starts with subtle signals. Inventories get tighter, delivery times stretch, premiums on physical metal start to rise, and everything still appears stable until suddenly it isn't. We've already seen small glimpses of this, moments where silver prices spike unexpectedly, where physical demand surges, where the price you see on screen doesn't match what it actually costs to get real metal in your hands. Those moments aren't random, they're warnings, small previews of what happens when a system starts to strain. But here's the question that confuses a lot of people. If the fundamentals are this strong, why hasn't the price already exploded? And the answer comes down to something most investors overlook, the difference between short-term forces and long-term reality. In the short term, silver behaves like a financial asset. It reacts to interest rates, the strength of the dollar, central bank policy, and overall market sentiment. So when rates rise or the dollar strengthens, silver can fall, even if the underlying supply-demand picture is tightening. And that's exactly what we've seen. Price volatility that makes the market look uncertain, even while the deeper fundamentals are getting stronger. And this disconnect is where opportunity begins. Because the chart only tells part of the story. The real signals are happening behind the scenes, in supply chains and industrial contracts, in inventory flows that don't show up in daily price action. And when you start looking at those signals instead of just the price, a very different picture emerges. A tighter market, a thinner margin for error, and a system that is far more fragile than it appears on the surface. Now imagine this scenario for a moment. Industrial demand continues to accelerate as the world pushes deeper into renewable energy and advanced technology. At the same time, investor demand returns, driven by economic uncertainty or declining trust in traditional financial systems. And all of this is happening while inventories are already reduced and supply growth remains limited. That's not just a bullish setup, that's a pressure point. And when pressure builds in a fragile system, it doesn't take much to trigger a major move. Availability becomes tighter. Physical silver starts trading at noticeable premiums. The gap between paper markets and real-world supply becomes harder to ignore. And suddenly, a market that looked calm just months earlier starts behaving very differently. Not gradually, but all at once. And here's the reality most people miss. Markets don't reward the majority. They reward the people who recognize the shift before it becomes obvious. Right now, we are in that early phase. The signals are there, but the mainstream narrative hasn't caught up yet, and that creates both opportunity and risk. Because while the long-term direction may be building strength, the path to get there won't be smooth. There will be volatility. There will be sharp pullbacks. There will be moments where it feels like the entire story is falling apart. And those moments are exactly what shake out the unprepared. So the key isn't just understanding the story, it's understanding how it unfolds over time. Knowing when noise is just noise, and when it's actually signaling something bigger beneath the surface. That's the difference between reacting late and positioning early. Now I want to hear from you. Do you think silver is heading toward a real supply crunch, or is this just another cycle that eventually balances itself out? Drop your thoughts in the comments, because this conversation is only just beginning. And if you found this breakdown useful, share it with someone who follows the markets but hasn't looked closely at silver yet, because this is one of those stories that can go from ignored to unavoidable very quickly. Because when this shift finally becomes obvious, it won't feel like an opportunity anymore. It'll feel like something you missed. So stay informed, stay curious, and stay ahead, because the next phase of this story could unfold faster than most people expect. But here's where things take an even more interesting turn. Because the silver market isn't just dealing with a supply-demand imbalance, it's also dealing with a perception problem. Most investors still see silver as a secondary asset, something that follows gold, something that reacts instead of leads. And that outdated perception is exactly why this shift has remained under the radar for so long. Because when a market is misunderstood, it often stays mispriced. And when something stays mispriced while fundamentals are tightening, it creates a setup that doesn't last forever. At some point, perception catches up with reality. And when it does, the adjustment isn't slow, it's aggressive. Now think about how quickly narratives can change in financial markets. One moment, nobody's paying attention. The next, it's all over the news. Analysts are scrambling to revise their forecasts, and investors are rushing to reposition. We've seen this pattern before in other markets. And when it happens, the biggest gains are usually already underway. And here's another layer that most people don't consider. Governments and institutions are also watching these shifts. Because silver isn't just a commodity, it's tied to energy, technology, and national infrastructure, which means any disruption in supply doesn't just affect prices. It affects industries, production timelines, and even economic stability in certain sectors. So when you combine tightening supply, rising industrial demand, shifting investor interest, and growing institutional awareness, what you get is not just a typical market cycle. You get a setup where multiple forces are aligning at the same time. And when multiple forces align in a fragile system, the outcome is rarely small. And what makes this situation even more important is timing. Because markets don't move in straight lines, they move in phases. First comes disbelief, then confusion, then sudden recognition. Right now, silver still feels like it's in that disbelief phase for most of the public. Prices move, headlines appear, but the bigger story is still not fully accepted by the mainstream. But history shows us something very consistent. When supply constraints meet real industrial demand, the reaction doesn't stay hidden forever. It eventually forces itself into the open. Not because people suddenly become smarter, but because the system itself starts to reflect the pressure that was already building underneath. And if you zoom out, the structure becomes even clearer. This isn't just about 1 year or one cycle. This is about a longer transition where global demand for critical materials keeps increasing while extraction remains structurally limited. That imbalance doesn't fix itself quickly. It compounds over time. Now, imagine what happens when that compounding effect reaches a tipping point. It doesn't need a dramatic event to trigger it. Sometimes all it takes is a small shift in sentiment, a small spike in demand, or a small disruption in supply chains. And the entire market behavior changes faster than anyone expects. And that's why the real question isn't whether silver has value. The question is whether the current system can continue absorbing pressure without showing visible stress. Because in most historical cases, once that stress becomes visible, the repricing phase has already begun. And when that repricing phase begins, it rarely gives investors enough time to fully react. Because by the time the majority recognizes what's happening, the early moves have already taken place. That's how markets shift from nothing is happening to everything is moving in a relatively short period of time. What makes silver especially sensitive in this kind of environment is its dual identity. It's not just a store of value like gold, and it's not just an industrial metal like copper. It sits in both worlds at the same time. And that dual role means it reacts to both financial fear and real-world demand simultaneously. So when macro uncertainty rises at the same time as industrial usage increases, silver doesn't just move in one direction for one reason. It becomes reactive to multiple forces at once. And that overlap is exactly what can create sharp, unpredictable price behavior when conditions tighten. At the same time, global supply chains today are far more interconnected and fragile than they were in previous decades. That means any disruption, whether from mining output, transportation bottlenecks, or refining capacity, can have a faster impact on availability than most models account for. And this is why experienced market observers often focus less on price itself and more on structure. because price is just the surface reflection of deeper conditions. And right now, those deeper conditions in the silver market are showing signs of increasing tension rather than stability. So now I want to hear from you. Do you think silver is actually heading toward a real supply crunch, or is this just another cycle that will eventually balance itself out? Drop your thoughts in the comments below, because the direction of this market is still being debated, and I want to know where you stand. If you found value in this breakdown, don't forget to subscribe to Metal Market Insight, because we break down these hidden market shifts before they hit the mainstream, and the next move in silver could happen faster than most people expect. This content is for informational and educational purposes only, and should not be considered financial advice. Always do your own research and consult with a qualified financial professional before making any investment decisions.